Hello, everyone. Welcome back to the RationalInvestor.com's crypto. What is this thing? Crypto Top 100 show. Crypto Top 100 review. Crypto tastes great. I think we also call it the Top 100 Crypto Review. I don't know, we got a couple names for this. Every time I've started this show for like literally the past year, it's been a train wreck. Maybe that's the theme. Brian, Captain Unorganized. Anyway. I have no idea how this works, but YouTube is saying I'm live, so it looks like we're live. We've been live for about a better part of a minute, so I think we're doing this thing. I have the TRI Crypto Countdown little app that Ben has put together. I tell you, this thing is just next level. It's so awesome. Ben, unfortunately, Thanksgiving holiday weekend, he does have family. And he suggested that unfortunately this weekend he is going to be MIA. I think they have to travel to where they are having their Thanksgiving, U.S. Thanksgiving tomorrow. So wish Ben a safe and speedy return. And of course he has a nice holiday experience with the family and all. Now we do have Paul here with us tonight. Paul, or actually this morning. How are you today, Paul?
Good morning. I'm just looking at the charts, looking at Bitcoin on lower time frames.
I don't think Paul ever tells us actually how he feels. Are you feeling good?
Yep.
All right, there you go. Awesome. Good.
For me, it's a process. It's every day the same thing.
Okay.
I have a checklist every morning. I have to complete to know if am I able to scalp. If not, I'll keep my trading at day trading or maybe higher time frames. I don't know, 30 minutes, 1 hour if I'm not able to scalp. So it's every day in the same process.
All right. I suppose we could be living worse lives right now. So,
yeah, definitely.
But anyway, welcome back to the show. Welcome back, YouTubers. There's a few people over there. It's nice to see through the week people do watch this show. We get about a good people, probably a good 500-600 people that watch this show. So hope you all get good value for your time spent. We have Chris on the show, who does a really, really good job at managing all of this Monday to Friday on the site. I'm not very good at this. I do see that this monetization is off. I suppose that's because I swear like a sailor. But by all means, if you have questions, I think the chat thing is open here. I see TBG Crypto is over there. Hello, TGB Crypto. And he says, yes, I hear you. Awesome. Hello, Hector. Hector's over there on YouTube. We have BG. I'm not quite sure who BG is, but hello, BG. Paul over there is on YouTube. It could probably act as a little bit of a go-between if I don't see. I see the Matador is with us. So, and actually we have a kind of a really cool little sort of group of people that seem to be on the ins for crypto and offer some great feedback, or maybe our buddy, the great Dal Moody, will turn up as well. We've had a few other TRI OGers that like to pop into that YouTube and chit chat and interact with us while we go through the charts and talk a little macroeconomics as well, getting us ready for another exciting week in crypto. So anyway, welcome everybody. There's Michael. Hello, Michael. Nice to see you. Of course, as I had said, Ben is not here tonight, so we wish him the best. It might be a bit of a shorter broadcast tonight, tough to say. We've got, of course, Paul. He has an awesome presentation that he's very good at doing on a regular basis. And also, too, maybe we'll talk a little bit about what the heck's going on in the broader economy and how that, of course, reflects crypto. So, where to begin this fine evening? I think as Ben has pointed out on his app, and I thought this was such a great study. If you understand the algorithmic nature of Bitcoin, and you understand this concept of cost of production of commodities, and you understand the 4-year business cycle. Hey, Adam. Nice to see Adam's there in the YouTube chat. If you can put those 3 things together, then actually I think trading Bitcoin and making quite a bit of money from this whole experience is actually, I don't think it's that difficult. The only problem is there's an old expression in the market. Dennis Gartman, he used to always say this. You got to be, and actually there's a bunch of people who said it, but you got to be selling when they're yelling, and especially if you ever hear somebody say, "Oh, but this time it's different." That's like literally, and it's over. But anyway, this time it's different. Got to watch out for those things. So, selling when they're yelling, and I actually came into this space right after this yelling event. Actually, it was sort of right through it. And of course, this was all about Mr. Karpeles and Mount Gox and the Willy bot and all that kind of fun stuff. This was, interesting enough, the CME listing of Bitcoin futures, and the price just went absolutely parabolic right into that event. And this, of course, was our beloved, of course, Dog Bunny and Alan getting involved in the crypto space. And then sort of the DeFi orgy that turned out to be an absolute train wreck. Following the cycle peak. But in all 3 of these instances, I remember distinctly, basically just people throwing money blindly at the market, and that's usually a potion for disaster. And half of the reason why we teach the education program is if you can actually sit down, plan your behavior out, plan how you're going to, get rich from investing, then I think you can actually make the argument that your plan should be telling you now hey, it's actually time to actually seriously start considering about investing some money in this space. And the irony of it all is, of course, if you look around society, everybody's completely on their knees and not really very enthusiastic about going and taking risk in the market. So it's ironic how this silly game of capitalism works, and it's so cliche. I do like how Ben has juxtaposed both time fib studies and price fib studies into his sort of little windows of opportunity here. It's just absolutely beautiful. And the irony of it all is that this probably will continue on until we get to the point where maybe things like quantum computing and stuff like that can actually make things like passwords and stuff like that kind of irrelevant in computing. I don't know. That'll be an interesting hurdle when we come to it. But as long as... And I am starting to hear about more and more talk about that quantum computing coming on. But as long as we're still working in this current framework, I think the story works. And ironically enough, all of the train wreck and disaster stories that you're hearing about right now, ironically enough, they actually have very little to do with Bitcoin itself. which is, I think, probably the purest irony of all of this, is that Bitcoin itself doesn't really care about Sam Bankman-Friedman kind of people. Just like it doesn't care about Do Kwon, and it doesn't care about magic internet money. Anyway, probably the way I would look at this is you could read this one expression, and I often do this. Okay, well, enough of that conversation. Probably a good idea, Paul, for you to grab maybe a cup of coffee and get in your smoke now. And I'll finish my sort of macro rant, and then we'll jump on over to you if you'd like.
Yep.
I guess what I do with on the website Monday to Friday, and I trade futures contracts. I used to be a commodities broker. Actually, speaking of which, I did have a short working on Bitcoin for quite a while, actually. I put the short on back there 16th of November. So pretty much, what is that? That's, I don't know, is that a couple weeks? Actually, that was only a week ago I strapped that on. And it was interesting because heading into the weekend, the market was trying to point up, and it was sort of real touch and go whether they were going to go blast through these highs. This is a trade setup that I teach students in our education program, just trading the ABCD harmonic pattern. It's not harmonic trading, but it's sort of a bastardization of it. But the long and short of it here, it has me going short at about quarter of the anticipated range. If I'm right, I get paid 3/4. If I'm wrong, I lose 1/4. So it's 3-to-1 risk reward. And I have nice little rules that if half of the move happens, then I move my stop to scratch at this 50% level. So I was feeling bearish and I was feeling negative. And the irony of all this is I have this setup working, and at the exact same time, we've built these algorithms on the site, which I think are doing very, very well at sort of positioning yourself correctly. And the algorithms are actually starting to say, this market is washed out and you probably should be thinking up now. So, it's a trader's life. I'm a big fan of trading setups and just living with the results. So once I put this trade on, I didn't really want to tinker with it. I just want to let it play itself out. And as you can see, getting ready for the show tonight, I just got stopped at my entry level right there at scratch. So big hurry up and do nothing. Live by the sword, die by the sword. I'm perfectly fine with shorts not working as long as I get to move my stop to scratch, and it's a zero-sum game. So I don't really care. And I do have a whole bunch of long proxies going. Stock market proxies not really doing that well. A lot of these names got wrapped up in that FTX. But actually the crypto names themselves that I bought here, they're starting to look very uppy. And we're getting a lot of bullish 3-bar fractal patterns right down against the bottom ends of these ranges, which is very cliche. This is like this is very like how do you say this? Most markets like to bottom with a W. And so the question ultimately is, do you go and buy the W level? That's fine. That's basically what this entry was. But quite often what happens, and if you are a really sharp trader, you can do this, is if you notice, down here on the right-hand side of the W, you'll often get like little W's that come in down here. And this is like the trader's trade. If you can somehow sneak in off of these little W's and then the market pops up and it confirms these bigger W's, then you're just made in the shade. In this particular trade, this sushi, interesting how it did go zooming all the way up. This is sort of the power of the W's. It came slamming down right into the original W and just stopped on a dime. But notice we're starting to get this kind of W pattern again, where we went down, up, we come back down, test the lows, and do we actually turn back up here? And if we do, oh man. I mean, you see what happened here after this big honkin' W confirmed. So, things are looking a little bit better. I mean, a couple days ago, when we were looking at crypto, things were looking kind of grim. But how ironic, all we really have to do is just look at the dashboard. And by the way, we have Black Friday deals and stuff to encourage you to come in and join the site to get access to this breadth indicator. But ironically enough, the breadth indicator back there, when I was thinking, hey, you know what, maybe this is a bearish bot, the breadth indicator was pretty washed out. And it was kind of saying, maybe you better temper your bearish enthusiasm. And I hate to say it, but it sure looks like that was right. So, we'll see what happens here. And I guess the question ultimately here is why? Why is the market turning here? And I think the predominant reason is, and this is, crypto people are going to like this, but they're also not going to like this. I believe, and every single day of the week, I watch the entire market all sort of in unison. Something like the US dollar index is sort of the ultimate run for the hills. And if we maybe change this to like a weekly chart, right? Run to the hills, get out of risk assets, get out of anything speculative, and just go park yourself in T-bills, U.S. Treasury bills. That's guaranteed. It's about the only thing in financial markets that seems to be guaranteed these days. Even ECB stuff isn't really that reliable. But anyway, point here is you can see where the bottom came in on the U.S. dollar, and the whole darn risk market, including Bitcoin, has just done absolutely horribly. As the U.S. Federal Reserve has basically been saying, market maybe a little frothy on the inflation front, and we need to cool things down and sort of slow down all you guys spending money like drunken sailors. One market proxy that I like to follow, actually I got a bunch of them, but if we talk macro for a few minutes, like I said, that US dollar index going crazy. This is actually my favorite inflation-deflation guide in the marketplace. This is the relationship between the inflation-protected U.S. Treasury bonds and the not protected Treasury bonds. So if there is a worry about inflation, people will bid up the price of the tips to get that inflation protection. If they don't think that there's inflation in the system and they don't need to worry about it, then they won't pay that premium. And what ends up happening is the spread heads basically lower in the TLT's favor. So you can see how we hit a crescendo here in that sort of deflationary environment. And oh, by the way, if you want to get good at this investing stuff over the long term, this is all about things like Jupiter, Saturn cross. JP Morgan says millionaires don't respect astrology, billionaires do. That was 100 years ago when $1 billion was actually some money. Suppose you might argue now it's billionaires don't respect astrology, but what gazillionaires do. What's the next after $1 billion? Trillion, I guess. So as long as this was trending higher, we had a major problem with inflation. The good part about it is you can see, letters of the alphabet. We finally are starting to get M's in this relationship, and maybe we're even implying that this relationship is getting exhausted. I don't think we're quite done. If we look at a couple of sort of tools for measured moves, A, B, C, D, that's still a bit higher. And A, B, C, D, that's still a bit higher. So I don't know whether we're finished. But having said that, if this is some big honkin' fractal, what we should see is price in the short term come back down against these key support areas, then counter trend rally, and then if we fail on the counter trend rally and we actually start going through this support level to create just a big massive head, well, you can see head and shoulders pattern, then I think we can put the inflation bugaboo to bed, and we can actually start thinking about the economy growing in earnest without it being all just inflationary. So I think that a big part of the reason why you're seeing the market rally here, including crypto, is because of this big M. And you can see it right across the board. This is that inflation-deflation proxy. Here is the yield on the U.S. 10-year Treasury bond. Oh, what a surprise. Interesting high to low trend line. Rejection. Is that another one of these head and shoulders patterns? But there's a big fat M. What are we supposed to think about if we see the market smiling at us? The good part about this is interest rates. So if anything, we kind of like to see a big fat smile there, because then that means bond prices are actually heading up, interest rates heading down. And the only reason why interest rates would head down in earnest is if they feel the inflation problem is being subdued. So that's a good sign for growth. Again, what I find fascinating is if we go back to the dashboard actually was sniffing out market bottoms there back at the end of September, beginning of October, on things like the big Dow Industrials and the S&P 500. Interesting enough, of course, I think that if there's going to be a financial crisis this particular cycle, it will be in this cycle's commodity proxy. And guess what this cycle's commodity proxy is? It's crypto. And of course, we've got scandals du jour in this space, so or galore. So it actually makes a heck of a lot of sense that at the end of this fear cycle, transitioning into the next growth cycle, the crypto market's going through a bit of growing pains right now, just very much like at the very end of that last growth cycle. Maybe to illustrate. In fact, actually, what's really interesting is a lot of people in crypto are using and sort of social media. Where the heck did I put it? I think I just had it. Nope. Maybe it was over here. But they're using the crypto, they're using the .com boom cycle peak in the NASDAQ to describe the crypto bust. So it's interesting, this is a pretty popular image on social media about what sort of bull-bear cycles look like. This is actually the NASDAQ from the greed cycle peak, where people just bid up greed assets as stocks that had no earnings whatsoever to astronomical levels, and then, of course, the subsequent bust and what that looks like. So it's kind of ironic that is basically the NASDAQ 2000 peak image. And I might argue that crypto probably has to look like that, because we are now at the fear cycle apex, and this was NASDAQ, and stocks would be the greed cycle apex. Interestingly enough, you can see crypto, this pattern looks very similar. And my hunch is that, as we work our way through the next, 4 or 5 months, our bottoming pattern looks something like this. Which means, and if you think about it, and we look at the words, it makes sense. Panic. Well, we saw that FTX stuff. Lots of panic around all that. Capitulation, people throwing in the towel. Anger. Are we going to have, is Mr. SBM, Sam Bankman-Fried, no, SBF? I can never remember that guy's name. Is he going to be thrown in jail? Is Do Kwon going to be thrown in jail? Is Magic Internet Money going to be thrown in jail? The irony of it all is it's really cliche how this game works. And as you can see, this bottoming pattern, it takes, the one solution to all this is time. That's the absolute number one solution to all of this. But, the good part about it is we're down near the bottoming area now. And you're going to get a lot of these back and forth moves. And I have a funny feeling that we're doing like a back and forth, like maybe this part of the cycle. And what I've told people is, like, if you think about it from Bitcoin's perspective, you're probably going to find that if you can put yourself, I teach people in our education program, trade location. This is the easiest sort of trade location tool you can build. They're called Fibonacci retracements. And 61.8 is a very popular institutional fib level. So it's where a lot of pro traders will start stepping into the market. 78.6 is another one. A lot of these harmonic patterns, they operate off of these fibs. And this is my personal favorite fib. I love 78.6s. And what often happens is you'll see down the road is the market will flirt with the bottom end of range, but ultimately we end up bottoming right off that 78.6. And I got a funny feeling that this is what we're in store for. Kind of like I said, if we were going to look at a comparison to, this was the NASDAQ, the greed cycle peak, and where are we on this bottoming cycle, I think we're basically down in here right now. And what's freaky about Bitcoin is that it's very algorithmic. And that's this image. So it's actually kind of predictable. The irony of it all, though, is that it's very predictable that the public, not knowing what they're doing, will come in and chase and buy tops. And this time it's different, right? All that kind of conversation. And ironically enough, at the very bottom of the market, well, they're usually selling and capitulating, and they're angry and they're bitter. And, you can kind of see it in the space right now, Sam Bankman-Friedman and all that, and Do Kwon and stuff. People are losing a lot of money and they're getting like ripped apart. And, the irony of all of this, and I try and convey this to site members as much as possible, is institutional players know this game. They know it backwards. They've probably been doing it as long as I've been doing this silly game, and especially the bosses. So what we have to understand, if you really want to make money from this investing game, is institutional players actually buy down markets. So as this market's cranking lower, and here is just another example of this game, right? We'll zoom in here, go there, and we'll pull up good old reload zones, right? That's 61.8 to 78.6, and there it is. So down into this level, institutions are buying. They buy down markets. And sadly, of course, institutional players, they know this game, and when they see an asset go parabolic like this, they are selling into that strength. So, can you position yourself like an institutional player? Well, that's why I love these fib levels and reload zones. The colorful boxes make it a heck of a lot easier for you to understand, up markets and down markets. When you see green boxes, we should actually be thinking about, well, actually this is the time to buy this asset, believe it or not. That's a trade location conversation. There's a few other ingredients that we teach a lot of students. In fact, through this horrific market, I went to a dinner with a level 1 student recently, and Paul probably could attest to this. He learned the 3-step setup process. And he told me over dinner on Friday, and after he told me, I said, well, you're buying dinner then, buddy. But he said, Brian, I just traded the 3-step setup process. And that's location, indicator confirmation, price structure, go. And he said he's running a 92% success rate on his trading. 92%! Holy Jesus, I couldn't believe that. So this would be a good example where we're at step 1 of the process. We have good trade location. Step 2, keep in mind this is a weekly chart and we're going through this process. You might argue that as the price is making lower lows here, you'll notice that it's not nearly as steep as the move down here. So this actually creates a momentum divergence, or a divergence in price momentum, let's say it that way. And there are indicators that actually visually show this kind of information. This is a MACD histogram off of that weekly chart, and you can see it's making higher lows and higher highs, even though price itself is making lower lows and lower highs. What the fuck? Well, that's why it's not monetized. Stop swearing, Brian. Also, too, you can see that we have overbought and oversold oscillators. And this particular oscillator is actually suggesting that the market is very oversold. So I guess it doesn't really surprise me that short ideas are running into difficulty here. Now, the good part about it is if you trade setups, and you can do things like short setups, and you have rules about when to enter and when to exit, and you can take short shots. And if it's a half decent setup, then usually you'll see things like move stop to level get hit, and as a result, the short setup really didn't work, but it didn't cost you anything. Took a shot, but next bus 10 minutes. And as I had said there a moment ago, I'm actually starting to see lots of anecdotal evidence. Hell, this nice little 2-bar pattern, nice little tweezers bottom, this could create nice little fractal there. And actually, here's another application of that reload zone concept. Notice, right, I did the fib from that low back up to the high. There's no reason why you can't do this analysis off of lower time frames, and look at that. Reload zone, institutions buy down markets, and oh boy, did they ever take this thing down against those lows. And actually, that's not even the lowest low. Lowest low is over here. But look at that beautiful turn. Exactly where it's supposed to turn. Incredible. Absolutely incredible. And you want to get a real sharpshooter trader plan? What happens if we hunt for reload zones within reload zones? So I got this big honking reload zone that's giving me that level. And then I got this little reload zone that gives me this level. And look at that for trade location, boys and girls. I mean, that's just next level stuff. So I hope you can learn this. And if you can... and actually the good part about it, this is basically what Paul teaches, I guess demonstrates. I don't know whether he actually teaches. I don't know, Paul, you back from your smoke? I think Paul does like to just basically, look, you want to learn how to do this, just go to TRI and learn from the guy that I learned from. But yep, I think...
Basically, yeah.
Yeah, so the point here is, I mean, you want to learn how to be a really cool killer trader. I mean, this is what we do. We took Paul. Paul was basically a cop walking the beat. And now I think Paul could probably open up his own hedge fund if he wanted to. Talk about life-changing events. Just go take that silly TRI course and you're made in the shade. And you got to follow the principles, though. Which is easier said than done. Definitely easier said than done. And the interesting thing is, I've been at this game for 30 years. And it's not like it gets any easier on a day-to-day basis. And if anything, what I like to do is I'm an open book. So I went and took a trip over to Portugal and had a really great time meeting with a whole bunch of TRI peeps in September, October. I came back from that, and for some reason, I'm just not in the zone here. But the way that you work through it is you journal and you log and you diarize and you just keep working and working and working and demon finders and try and identify where you're screwing up and just slow and steady, and eventually things turn around. If anything, what you have to understand, all traders have to understand, is that you do end up every once in a while going on losing streaks. And it's through those losing streaks that most people blow themselves up. And you just have to, your job is when identify that you're in that losing streak and then dial things back. And just keep working away, get through the streak, start putting some wins together, and then you can start building up trade size again, etc. So anyway, interestingly enough, and I don't mind getting stopped on setups. The most important thing for me is, am I following process goals? If I follow the process, then things work out generally fairly well. It's when I start second guessing myself and I start breaking the process and I start seeing what the hell, yeah, I got stopped out, but what the hell, I still like this short, go short it again, and then the damn market just takes off and you look like a doofus. So super important. You always hear it from Paul, trade your setups. Try not to inject your opinion into all this and live with the results. So back to what I was originally supposed to be talking about. US dollar index as sort of your ultimate fear proxy. Why is it's coming off? And so as a result, what ends up happening is capital starts flowing back into things like the euro, hell, even flowing into things like the Japanese yen. Seeing a lot of the sort of commodity currencies are fighting their way back here. There's a double bottom in the Canadian dollar. Stock indexes, they're starting to come back in earnest. And it's all predicated, and really the bond market, this is price, and of course price moves inverse to yield, and that's what's driving this, is this idea that maybe this inflation monster has been put back in the box. So with that in mind, and I don't necessarily think that we're done here on this whole interest rate and inflation thing, but the market always moves in ebb and flow. I think it's interesting that, if you are a site member and you've been following along, there are a few people that I like to follow in the marketplace, and then there are some historical studies that I think are very relevant and very helpful. This is sort of U.S. election cycle studies. You can see that, from the get-go, we're looking for the market to move up into the end of the year. And then we had things like decennial studies. What year is it? Are we in the decade? How does markets behave through that? Again, looking for the market to rally into the end of the year. So we're doing that. The only question I have here, though, is, is this more of just dead cat bounce? This was the January barometer. And they often say that as the stock market trades through the month of January, this is actually what the whole year is actually going to look like. And I think you could make the argument there is sort of the end of the year counter trend rally coming off the lows. So, I think looking for Bitcoin to work its way back up here. We're looking for crypto to work its way back up here. Okay. But I just don't know whether this is a whole new, brand new bull market just yet. I have a funny feeling we're in this phase of the market where my mouse is here, where we might rally, enjoy a nice little pop, then have to come down and into the new year, maybe swim to new lows. And we actually don't end up actually fully, quote unquote, bottoming until maybe like middle of 2023. And why do I say 2023 in particular? Well, again, this totally awesome blog. I love this website. The work that we do here, I think, it's second to none. This blog is technically free, and I don't see many paid for research facilities give you as good information as this blog does. And one of the articles that we put out last year was a revisit of the Benner cycle. You probably never heard of this before. But in essence, Benner cycle, this was actually drawn up like 200 years ago. And it's actually been one of the most accurate predictors of cycle pivots around. It's so simple. and yet it's so stunningly accurate. And you can see how it was basically calling for a bottom there. It was calling for a top 2019. Of course, the top came in the market in January 2020. That's pretty damn close. And I think, it's calling for a bottom in 23. And I wouldn't be surprised if 23 is a very bumpy year. As an interesting sort of aside, and maybe we should do a blog post on this. When I was in Europe back there a few months ago, I was staying with one gentleman in particular, and we were looking, just not to get too far off topic, but it is an interesting sort of aside, that we were studying UK inflation. And I even put a tweet out to this effect because it was like so stunning when I saw it. Of course, it goes Ukraine. A year or two ago, would anybody be looking up Ukraine? It's almost funny. Now it's, of course, front and center. So United Kingdom. Year over year inflation. I guess maybe, let's see if I use that one. Yeah, there we go. This is a really cool application of this concept called chaos theory, where markets often move in very predictable fashion. One of the objectives is 2.618. This is bifurcation, all that kind of talk. Won't get into that, but the next one, and the really important one, is 4.669. And there is 4.669. So it's interesting if you look in the United Kingdom right now, their inflation is absolutely out of control. And I got a funny feeling it actually has to work its way all the way up here to 13-14% before it actually starts showing signs of exhaustion. So that's another reason why I don't think that this problem with inflation is done with just yet. But we'll see. I mean, it is awfully nice to see we've got the smatterings of tops coming in on the interest rates. How long lasting that is, I don't know. I don't think it's going to be... I think that this is ebb and flow. It's probably something like this where we're going to have to go back and forth for a bit. There is 2023. If this takes the better part of 23 to actually work its way through and then into 24, which I guess would be over here. Maybe, this was just optimistic. Maybe it's something like that. I could see something along those lines, and it would be through 24 that we get all excited. So it's good to see that, maybe we're closer to the top of this inflation problem than the bottom. But at the same time, too, who's still running around Eastern Europe causing trouble. And, of course, we still have this whole China problem floating around as well. So those two issues probably have to be put to bed before, we can start getting back to growth stories again. So, it's encouraging that we're working our way through this correction, but I just don't think we're quite there yet. But the interesting thing about that is, especially with regard to something like crypto, is you actually have to force yourself to now start thinking about coming in on the buy side. This is the only business when stuff goes on sale, nobody wants to buy. Can you put yourself on some sort of buy program where you're just going to slowly accumulate through this whole trough here? As we had said earlier, the great part about Bitcoin, of course, is we've got these halvening events, which quite literally are the fundamental resets every 4 years. And my hunch is, by the time we get back to talking about halvening events, and this, of course, is now the second quarter of 2024, then at that point we can we'll be thinking about inflation in the rearview mirror. Hopefully, all that war stuff going on in Eastern Europe has played itself out. Hopefully, Asia's sort of calmed down to a certain degree. And we start the whole darn cycle all over again. And, to give you sort of a bigger 10,000 foot view of what that process looks like. Of course, you've all seen this at length. But, geez, I don't know which one it is. Maybe this one? There's a few of these charts I've shown you guys. Oh, that's the one I just had up there. That one we already have. If you want to talk about the psychology of the market, I think we're definitely in the public is getting destroyed part of the market, which means that you smart guys actually have to start thinking about accumulating. But what I wanted to show you was, where are we here? Actually, I think it's this one. Let's try here. Yeah, there we go. So here is the fear-greed cycle. Every 17 and a half years. It's quite remarkable how consistent it is. So we are now fully into this current greed cycle. And then if we actually look at how Bitcoin behaves through this cycle, there's the Benner trough 2022 to 2023. So here is January 2024. And of course, there is the 16 to 20 cycle. And as of here, we started talking about things like halvening events. And of course, you can see yellow what happened following. Blue or teal here, this was the 12-16 cycle, same thing. This was the second U.S. government Silk Road seizure coin auction. That was November of 2015. And I get the feeling that this cycle is going to look a lot like this cycle. But then halvening, and then there's 15-16's bull. So, well, actually, the other side, right, 17-18. So, ironically enough, by the time we get to 2024, we'll have worked through our Benner cycle correction window. Interesting, you can see there's the stock market's move, respective part of the cycle. That was the baby boomers, and this was the 87 crash. But ironically enough, all the 87 crash did was just bring the market right back to where it started the big bull run from. And then this is your grandparents, or maybe great-grandparents for some of you, the greatest generation. But you can see there was big breakout there. And that, of course, is our next bull cycle right there. You can see equities, stocks do very, very well. And I would imagine crypto is going to do well too. So the point here is, you can see we're sort of halfway through this mess. And now we've got to get through 23. I suppose the study could be updated. Missing a few bars here. But this is what I think the next sort of year or so looks like. We're right in that window there. We should see, actually, a fairly sizable dead cat bounce. What's interesting about this was I did a video, and actually on our, if you want to come and learn a little bit about TRI, although I don't think it's this page, it's a different one. Hold on. You want to come and learn a little bit about TRI? We have a cool sort of, these are all tweets and messages of people that really enjoyed this show on this this school sign up page. Our next term starts in about a month and a half in the new year. And by the way, we do have Black Friday deals coming up. So if you are interested in taking advantage of Black Friday deals, put your name and your email address on this sort of reservation list. And Julian and the whole marketing team are going to be sending out all the Black Friday deals, whether it be for the school program or whether it be for the website and the indicator, subscriptions and all those kind of things. They'll be sending them out on Friday, right? Hence Black Friday. But point here is that I did a video with Da Vinci right around this point in the Bitcoin cycle, last cycle, right here. And even here, people were having a very hard time believing that Bitcoin was going to do nothing more than just a very typical 50% bounce. And yet this is exactly what Bitcoin always does. Well, all commodities do this. This is just so normal. 50% bounces. And you can see it was just absolutely perfect WD GAN material. But just think about this. That's at $3,000-$4,000. That's like $11,000. So could you buy some? Same sort of thing. Notice how this is like November, right? November 2018. So price is coming off. You just start accumulating. Do you want to wait for the W? Fine, doesn't matter. Or you could just put yourself on a dollar cost averaging plan because we are down at 78.6s and reload zones. And then on this 50% bounce, can you sell half? Get yourself a risk-free trade going forward, free Bitcoins for the rest of your life. It's not such a bad idea. And I don't see any reason why we can't do exactly the same thing here. So you never know exactly where the market's going to bottom. I wouldn't be surprised if there's some more, fits and starts. But, by the time we get to like 2020, this time next year, by the time we get there, my hunch is we're back up 20, 30, and maybe even pressing 40,000. You can see this is the 2015 bottom. And I think this market's going to look a lot like this. And it looked like this, right? So down, swimmy. But by the time 1 year rolls around, the price is all the way back up here. And that would not surprise me one bit. So that's sort of the backdrop of what's going on right now. A little bit of uppy because the Feds, the talking Feds down in the States, kind of suggested that maybe they can cool their jets on raising interest rates here a little bit. That's put a bit of a top in the fear asset proxy, this U.S. dollar. Capital is starting to flow back into risk assets. As we said, the stock market's starting to work its way right back up top. And I wouldn't be surprised if crypto actually has a pretty nice little rally here because we're awfully oversold. I think I showed you. This is a weekly momentum picture. And RSI does not like sitting down in the oversold zone, right? I mean, look how often RSI is down in this part of the chart. Almost never. So, is this kind of scenario here? And then, of course, look what happened following. Can you put yourself on a plan to actually start accumulating now? I bet you it's not easy. I bet you if you go to your family, like if you're an American, you go to your family Thanksgiving and you say, you know what, I'm thinking I'm going to start investing in Bitcoin right now. Watch all the turkey come flying out of their mouths as they sit and laugh at you. The irony of it all is that looking at a lot of these altcoins, they're starting to look really interesting here. I've already flipped this one once and got back in, so we'll see what happens there. Chain came right off the bottom, this link, looking very strong now here. And this Uni's holding the lows. What's also interesting, too, is we run a weekly commodity trend survey here, and this is something I used to do when I was a commodities broker. And interestingly enough, if we are hunting for buy signals, and that means that the algorithm itself gives the asset a very high score. I won't get into how it scores it, but 5s and 6s are the best score. And if you look at like the broader stock market, even like the stock indexes, you're getting 3s and 4s. Nah, not really that exciting. Just sort of middle of the road. If we look at things like sectors, right, all the different sectors of the economy, 3s and 4s, not really exciting, not really compelling. Then you go over to crypto, and look at this, 6s. Look at all these darn 6s. Remember I said 6 is actually like a buy signal. And look at all these 5s. 5s are setting up buy signals. I'm telling you, folks, there's something big is going on here. And this is the computer sort of saying, look, 50% rule, I showed you that on Bitcoin. Some of these names, and you've seen what Litecoin's done recently. I thought it was interesting. Somebody was kind of making fun of me because I had posted on Twitter and stuff, holy crap, look at these bottoms coming in on Litecoin. But look at the 52-week high. It's $231, and the 52-week low is $40. So the 50% level is 136. And, as I said there a moment ago, well, let's see, where the hell's Litecoin? Now we're sitting $77, climbing that wall of worry. There's the 50% level. And look at this bullish divergence. And now finally, what letter of the alphabet do you see here, folks? Down, up, down, breakout. And now, what I thought was really interesting, that's a weekly price chart, so the W's are actually starting to form there. Now we can actually even go to like a monthly chart. Hey, look at that. That's a W. Down, up, down, breakout. So it's weird. It's like, as I had said earlier, institutions buy down markets. Public buys up markets. Hopefully you're seeing that it shouldn't surprise us that this thing is basically right back against its old lows, and it's actually starting to show signs that somebody is buying in here and bidding the price up. And that, I think, is your context. I don't know whether it's necessarily a new bull market, but if you can buy down here, 40, 50, $60, and you can force yourself to sell on moves up to 100, 120, that's a double. Get free coins, put the free coins on a ledger, bury the ledger in your backyard, you got those free coins for the rest of your life. Then when the public gets all stupid again, and Charlie might even be back in the story, who knows, you can go out into the garden, dig up your ledger, and then start sending the coins to centralized exchanges and sell at absolutely ridiculous prices and go buy your Lambo. So that's the kind. If anything, that image right there is a perfect testament to this market state, where they are throwing the baby out with the bathwater. And notice on our weekly commodity trend survey, I thought it was interesting. Litecoin had not. It was still a 5, which meant that it was super cheap relative to its 50% level. But it will only turn to a 6 when the moving averages on the weekly basis start turning up. And oh, what a surprise. This rally here now, as you can see, it's going to force these moving averages to cross. So looks like Mr. Charlie's going to be spitting up a trending signal here soon. Where the hell are we? Boom. See? There it is. So, anyway. All right, so that gives you a 64,000-foot view of what Brian thinks is going on in the market. Short-term trades, I am doing some stuff. I have to say, Paul and his report is very clear and concise for short-term trading setups and thinking in the marketplace. So, Paul, have I put you to sleep yet?
Not yet.
All right. So it's your turn to shine, sir. So would you like to do a screen share for the good people and walk them through what you're seeing in the market?
Yep.
All right. So let's head on over to Paul's land. I will review look at all those wonderful comments over there on YouTube. So that's kind of cool. I'm sure we have lots of questions. So after Paul's done with his presentation, then maybe we'll do a little Q&A with you guys. So if you have questions, make sure to write them down. And then hopefully you'll get a pretty good idea of what we're all thinking about the market. So you can see there is Crypto Trader Arena weekly report. Look how pro this report's turning day. Pretty impressive. All right, I need to hit the full screen button. Sometimes I get this wrong, so let's see. Is that it? Yay, I did it. I'll put myself on mute, and Paul, you've got the floor, so tell these good people what's on your mind.
Okay. Last week we had some trades, but the market was not even for scalping, for day trading was not suitable. So we post some trades on live streams, but only 6 trades. 3 wins, 3 losses, 5% profit. A bit small for my taste and my usual week. Personally, made more than 6 trades, but I count only the trades we put on the live stream before the entry. So we have to be in this table. The trade has to be posted in the live stream, posted in the channel before the entry, and it has to be a complete idea with the entry, stop loss, and take profit. This is the only way we will put the trade in this table. On a very long time frame, 12 months, if we take a look, we can see something a bit, I don't know, interesting. The support is at 14K, at least in my view. You can see 78.6 if we put from zero line. If we put the a retracement, you can see 78.6. You can see the monthly close, the 12 months close. A lot of people expecting lower and thinking 10K. Yeah, it's possible, but let's get below 14K. Let's see what happens if we'll get to 14K. Let's see what happens at that level. For me, it's a really interesting level to watch. Let's see what happens if we'll touch that level, and when we'll do that, I'll go on lower time frames and maybe I'll take a look at that point. On weekly chart, yeah, we are below 2017 all-time highs. We lost support. We are going to the cost of production. I don't know. The cost of production is a bit different depending on what you're mining, with what tool you're mining. Idea is you can see the POC, yeah, below 14K, at 14K below it, between 14 and 10K. It's a good level to think a bottom in Bitcoin. But let's play level by level and let's see what happens next week and so on. On daily chart, on daily chart, and the last weekly review, we saw the bearish divergence between price and indicators. This week, what I can see, I see a triangle trying to form. I could see, I see a range. If we go on lower time frame, I could see a range. At this point, for me, I was trying to find a new range and playing the range game. I don't like to assume the market will go lower or go higher. Usually, after a move like that, we need some consolidation. So for me, trading in a range is the perfect way to see the market. We don't like to try to catch falling knives on swing trading, so we'll update when it'll go on lower time frames. But the idea is to wait for a clear signal, or at least on daily or 4-hour chart for altcoins. You can see the indicators pointing down, bearish divergence. Now we're starting to point up to see some bullish divergence on daily chart. On 4-hour chart, as you can see, we have this. I identified a nice range. You see the dump, the bounce, and we can say this is a nice range. So let's play the range game. And at the moment this report, the market was just backing off at the reload zone and the long reload zone. I don't know, multiple reload zones. A lot of people were bearish at this point. A lot of people thinking we are going lower and lower. I even made on the community. I made an urgent I don't know, meet or live stream, and I told people don't panic. Wait to see what happens at the lower part of this trading range. And as you can see, the range was well respected. We just did an SFU setup or took to all the lows, stopped out a lot of people on this week low, and put a nice W and back up in the middle of the range. But I'll play this range until at some point this range will be broken up, will go up, or maybe it will go down. Until then, I'll try to play the range game and sell at the bottom of buy at the bottom of the range and sell at the top of the range. I have some we can put simply from the top to the bottom, we can put a long reload zone and a short reload zone, and we can play and wait for clear setups in lower time frames. Even if I made the range on 4-hour chart, I'll zoom in on, I don't know, 15-minute chart, even lower than that, and I'll play the range game. Let me give you an example. Uh, this is the trades we made this week. So as you can see, in this area, even on lower time frames, we had a nice bullish divergence in this move down, bounce, retracement, a nice W. So we had all the reason to take a long. We put a long. We made 2-1, close the trade, and next bus. After that, I can see AB equals CD. Same idea. Let's put the bot levels. One low, two lows, three lows. Hit the bot entry. 3-1. Next bus. And at this point, I was thinking short, because I see AB equals CD on even lower time frames. I don't know, 3-minute chart maybe. We can see it. What I was thinking at this point, something like that. So you can see AB equals CD. So I have one high, the second one, the third one, the entry. I managed to get 50% level hit, move my stop to scratch, and at the FOMC meet, I was stopped out at scratch. No big deal. I didn't lose any money. I was stopped out at scratch, and now I'm waiting for the next boss on, I don't know, this time frame or even higher to see what happens. That's the idea. That's how I trade. Clear setups. I am waiting for all the reason in my all the condition in my setup to have all the condition from my setups, and then I'll put a trade in the market. If I'm not in a trade, I'm 100% in cash, waiting on the sidelines. So this range, I'll play the same game. If we'll go to the top, I'll try to short the market. Indicators, I don't see anything special. I didn't saw anything special at this point. Bitcoin dominance, you can see we are at the bottom of the range on 4 days. Touch the long reload zone, bottom of the range. I'm thinking Bitcoin could take some dominance back at this point. Slowly, we can consolidate at this level and then go up. But let's play level by level and look at the market in the same way. Let's see what happens at this level. Maybe we can. We don't have the strength to put a W. Maybe we can put an AB equals CD and broke the range to the downside. We don't know that. We'll play what the market will give us. But now seems likely a nice W could form in this area, and we can go up again to the middle of the range. I don't know, to retest the 44 level, something like that. Ethereum versus Bitcoin at the time I made this weekly newsletter was high, just broke below the short reload zone. In meantime, we managed to go down, and now on lower time frames, let's take a look at Ethereum versus Bitcoin. On 4-hour chart, you can see we had an M, we had the breakdown. Was a nice trade for people who trade this Bitcoin, Ethereum versus Bitcoin. We had another M in the short reload zone. We had a nice retest down, and now we're trying to bounce up again. But on bigger time frame, we are in the same range. We are close to the middle of the range. So I don't have a clear view what will happen Ethereum versus Bitcoin. Maybe we can go down and retest this level 0.059. Maybe, why not? But it's still a long way to go until we'll reach that level. Same idea, level by level. Let's wait and see what happens. Total two. On total two, at the moment I made the review, total two was exactly at the support level, all-time highs from 2017. Now it's a bit uppy, is a bit higher than that level, but same idea. We are at the support. Let's see if we have the power to put a W. We have a nice location, but let's see if we have the power to put a nice W on bigger time frames and go up again. Yeah, we can retest if the market will behave nicely. We can retest $1 trillion. Why not? But at this point, I don't have a clear view. I only have a nice location, and that's it. I have to wait for a clear W to have a clear view about this market. The calendar, we didn't have too much news this week. Uh, Yesterday we had FOMC. I saw we also what happened. They say they'll lower their expectation to higher the. I don't know how to express in English, but you Brian talked about this one. I'm expecting a lot of people they don't see the value in this report. I'm expecting a nice dead cat bounce at least in a crypto space. First, we'll start with Bitcoin. You can see Litecoin usually at the bottom likes to be a leading indicator. Let's see what happens, but I'm a bit bullish until the end of the year on crypto. And altcoins, even now, I don't know. I have some trades on altcoins, but if we take a look on even on 4-hour chart, we don't have too many W's. It's still early for me to frame a trade on altcoins. The trading conditions they are still hard for me at least until now. Maybe it will get easier, but at this point they are still hard. Let's take a look at some altcoins on 4-hour chart. Let's see, Litecoin. This one I missed the opportunity. Next bus. I had this trend line. I had the opportunity to enter at this LJ setup. I even had the retest. I didn't saw at that point. Next bus is too late for me. I have to wait for a retest at least at this level 64, something like that. This one you can see no clear W until now. Yeah, we have some bullish divergence. Yeah, we have, but I don't see a clear W. And I'm on 4-hour chart on daily. I don't have anything. I have a nice location, but that's it. Solana, a lot of people they are bearish on this one. Me too. I didn't include it in my day trading, not even on investing at this point. I'm still waiting for lower levels, but on short term, we can retest $25 pretty easily if Bitcoin will behave nicely. I don't see why not. A lot of people they are short this one. Yeah, but technically I don't see anything. You can see bullish divergence in this last move down. RSI, MACD, Willy was oversold. Even OBV is trying to put some nice W's. I saw some news that Sam will speak at I don't know some event. It's a bit ironic and stupid, but this is crypto market, so we'll trade the chart, not the news. I personally I prefer to trade what I see in the chart. I don't see anything clear, so I'll sit out on this one. You can see AVAX, same idea, no clear W. Link, I had a trade, I was stopped out. Now I don't have a clear W. I have a nice location. I have to wait for a clear setup. Um, Same idea on most of the altcoins. You can see this one has a W, not a clear and nice one, but has a W. But it's a bit late for me. If I want to take this W, I have to wait for a new one. I like Ripple. You can see we have a on 4-hour chart at least, and even on daily, we have a trading range. I like that. So let's see what happens with Ripple, but on longer time frames could be a buy. If Bitcoin behaves nicely, Ripple could be a nice buy. Algo, you can see I drew the same range. We are below. We have a nice location, but take a look at 4-hour chart. I like that. When I see a clear W like this, yeah, maybe I'll wait for a breakout from this W and then a retest and then enter long. As you can see, we have a bullish divergence in MACD, multiple bullish divergence in RSI. Wheelie is oversold, even a bullish divergence in OBV. So I could hunt on something like that on algo. I have a shorter term trade. I'll show you a bit immediately after I'll finish this one. RSR, same idea. I don't have a clear W. Atom, let's just wait for a clear W. In my opinion, if I don't have an on 4-hour, I don't have a clear W, I cannot put a swing trade. I have to wait at least a 4-hour W. Let's see. Alpha, same idea. And near. And here we have a W, and it seems like we are starting to go up. I'll keep an eye on this one. On lower time frames, let's see, I don't know, 1 hour time frame. I have a trade on near. You see this inverse head and shoulder pattern, W, call it how you want. I have a trade. I posted even on the community. We had a nice retest, another chance to enter on this one, and we are starting to go up. I like that. And I have something on algo. On this one, I was hunting on lower time frames. Let me show you something. I like this one. I even posted on Twitter. Let me see. No, I made a stupid mistake. Let's see. Something like that. So I had this inverse head and shoulder pattern, and I just entered at this confirmation of this W. I had 2 to 1. I closed 50%, move my stop to scratch. I'll trail the rest. Let's see how much this one could go higher. My stop loss on the remaining is at 50%. Let's see what happens. I'll keep trailing this one. We have a lot of room to go up. Even if I put a 50% from this correction, let's see, something like that. I don't say short reload zone, I could say only 50%. And if I put a 50% level, you can see we can go a lot higher. So I'll trail the rest. I took 50%, nothing to do at this point on my part. I'm keeping an eye on 2 altcoins on 1 hour time frame and higher. On this one, I like this one to see what happens. Didn't broke the low on the last move down. Is damn oversold on a bigger time frame, so I'll hunt something on this one and 1 inch. Same idea. I want to see what happens in this one on higher time frames. On this time frame, maybe I could hunt something. And another altcoin I like is this one. Peer. At this point, I like this one. I have a spot position, nothing on leverage. We cannot trade this one on leverage on Binance, but I have a spot position from this point. Let's see what happens. Even if I put 4-hour chart, you can see a nice W in this area. I hunted on lower time frames, a nice entry. This is the second trade. I had another one at this point. I was stopped out at this level, and give it another chance. Let's see what happens this time. That's it from my part on altcoins. On most of them, with the exception of Litecoin and a couple of other altcoins, I don't see a clear W on higher time frames. So we are still early. If you'll get for my part, if I want to put a swing trade, I need a clear 4-hour W at this location. If I don't have a clear W, I'll sit out and wait for a clear W. That's it from my part. Nothing special. Just like usual, trade every day, hunting on lower time frames until I'll get a clear view on swing trading. Sometimes you get a nice trade. Sometimes you'll be stopped out. The important thing is to respect the process, to respect your plan, your setups, and be consistently profitable. In the long run, if you respect the process and you use the setups, learn from Brian or any setup with at least 3 conditions, you can be profitable. But the problem is a lot of people, they don't focus on respecting the process. They focus on making money in the short term. And I see even on my community, I see a lot of people, they lost some money in this bear market, and their mentality is to recover the money they lost. You have to reset yourself. Stop trading, stop doing anything, take a break, reset yourself. That money is not yours anymore. You cannot recover that money. You have to make new money. You have to start from the point you are now. So if you have a small amount of money, make a plan with that money. If you want to start swing trading, risk, I don't know, maximum 1% in this hard condition, and you'll make money again. But you have to reset yourself and focus on respecting the setups. That's my idea about swing trading and the last move and Bitcoin. Brian, that's it from my part. Yeah, the tagline is just below right here. Treat trading like a business and market will treat you like a king.
There you go,
But
folks.
keep in mind the last part with the king, it's if you respect if you treat trading like a business, not the other way around. So nobody will treat you like a king if you don't treat the market like a business.
Yeah.
You have to do your part first, and then market will treat you nice, but do your part first and then expect some results.
Question is, how do people who have lost some money, how do they get from the point where they're stressed out about them losing the money to starting afresh and hitting that reset button?
Yeah, they have to take a break. My view is just take a
You got
break.
to take a break, but there's actually something that you have to do, which is very difficult for a lot of people to do. And that is, you have to, this is where having a rehab. Well, that's what. Hey, it would be cool if there was like a trading rehab that you could go. And technically, actually, that's part of why we're doing the Portugal campus idea, is that campus should be a rehab. But there you go. Actually, Constantine actually nailed it. Cole here nailed it. I was gonna say that, but then somebody put rehab, which was funny. But a lot of people, if you have a wife or if you have a spouse or something along those lines, you have to get it out. And the problem is that most people, especially if you're by yourself, you just let the demon, it just keeps going around and around and around in your head. And, half of the reason why I like doing these shows is to verbalize everything that I'm doing in the market. And it makes it so much easier to let go of your shitty past trades. So the way, I showed you guys earlier the dashboard that we have on the site, and my journaling and my logging, because that's the only way that you get rid of the crap, is you have to write it out. You have to verbalize it. There are some people that actually like to record them talking, just to make sure that they have it on record that yes, indeed, they've admitted to their mistakes. They've made a commitment to try and get rid of the mistakes, and they just acknowledge, hey, I'm human. I make mistakes like everybody else. And that's, I heard Paul talking a little bit about some of the people in his community who are carrying the baggage with them and trying to make the money back that they lost. And ironically, what Paul said there about the process is probably the most important thing. Is you have to, even though it might sound really difficult, you have to forget about the money, and you have to sort of commit to excellence with following the process. And that might actually be committing to excellence in how do I lose money? How do I lose money excellently? That's not an easy thing to learn. It's not an easy thing to get through. And, for students at the TRI program, we literally spend the first couple weeks just verbal diarrhea. Just get it out. Tell me all of the crap so that you're not carrying it around in your subconscious. And anybody who's a part of Paul's community that's having problems with that, that's my number one suggestion, is get it some sort of journaling. It could be just a piece of paper and a pen. Probably going to need a lot of pieces of paper. But the point is you got to get it out. You've got to write it out. You got to verbalize it. And once you've done that, then it actually makes it a heck of a lot easier to move forward in life. So anyway, wanted to add that.
The community could help you. Who is in TRI knows that. If you have a problem, talk it in community. Don't be ashamed that you lost some money. I personally lost money a couple of times, and a lot of money. You just have to have the power to take a break, put it on paper, journalize, and start over again. That's life. It's only money. You can make the money again. If you have the skills, you can make the money again. The important thing is to learn the skill, to learn the process. After that, you realize, I could make money to $100. I could start over again.
Yeah.
And then it's not a problem after you have the trust. You are the guy who makes money.
Yeah. So anyway, great advice for all of you people. I sure hope you're listening to this and respecting it, because sadly, you don't hear enough of this kind of conversation in anywhere on social media. Anywhere, even on like classic media, CNBC, stuff like that. Nobody ever talks about this kind of stuff. And yet this is actually the most important part of this whole trading experience. So.
Yeah, but this conversation doesn't sell subscription, Brian. So that's why we don't talk about it.
Yeah, you're right. Well, I tried to, Jojo put me on this mission 10 years ago, and I'm hell bent on it. We're going to change the world if it kills me. But anyway, what should sell subscriptions is seeing our group week in, week out, coming to you with the exact same message. None of us have gotten wiped out through this whole crypto mess. And if anything, what we're doing, a lot of TRIers, is just sort of sitting here waiting. Just waiting for those weekly W's to start coming back. And I got to say, they are starting to slowly come back here. Okay, somebody did ask over on YouTube, and just to follow up, I actually wrote out an answer for the Matador. Said, I remember in my level 1, week 2 class, why can't we just buy weekly RSI oversold and sell weekly overbought? And I was literally audibly laughed at. As I had sort of pointed out on that Bitcoin chart that I was showing you there earlier, the one danger about taking that kind of approach is that momentum oscillators don't have to turn back up. And sometimes momentum oscillators can sit either heavily overbought or heavily oversold and just sit there for long periods of time. And that's sort of what my answer there to you, the Matador. Basically, I said, You know, and actually, why don't I'm going to hijack the screen here on you, Paul, so that I can
Yeah, I'll
demonstrate
close my
this.
screen.
Boom, boom. Where are we here? All right. This is a weekly chart. And actually, probably a good example. You might have said, well, Brian, I'm going to go load up on Bitcoin. There is the weekly oversold level, so I'm going to go and buy. And ooh, look at me. Well, as you can see, that was over here. So it didn't quite work out very well. So the point I would just make is that RSI doesn't like to be oversold or overbought. But here's probably a really good example. If you had used that same logic and said, as soon as RSI is going to get overbought, I'm going to go in short. And that was like right here. Uh-oh. Holy crap. Look what happened. So I don't know whether you were laughed at. And if you were laughed at, my apologies. The one way that students get undermined in their learning is if they feel foolish for asking questions. And you should never, ever feel foolish for asking a question. Never, ever, ever, ever. So sometimes I do poo-poo people's questions, especially if I've been doing, like a 2-3 hour video and I'm just blabbing on endlessly. Sometimes I'll just like flippantly answer a question. My apologies if you actually did feel as though you didn't get properly respected with your question. But hopefully this illustration right here where RSI went oversold, but you see price is actually lower now than where it was there. And then, of course, this illustration when RSI is overbought, oh boy, that could have led to trouble. And hopefully now the Matador, and I know you know the answer to this, but should we ever take a trade in the marketplace based on just one reason, regardless of how wonderful we think that reason is? Should we ever? I mean, maybe people on YouTube, you can help. There you go, TBG. Actually, that's you answered my question with that statement. We should try and never, ever, ever take a trade off of just one reason. And actually what ends up getting a lot of people into trouble is they'll say, okay, well, fine. That Beamish guy says you got to have 3 reasons to take a trade. So I've got MACD pointing down. I've got RSI pointing down from divergence coming out of overbought. And I've got Williams percentage R crossing the moving average. There's my 3 reasons. And the irony of that is that actually this is just one reason. It's just one reason expressed 3 different but actually very similar ways. And this is basically analyzing price momentum. So and of course the Matador, I'm sure, I don't know whether you're watching this or not, but I hope you are. What we want to do, and this whole 3-step process is we would like to ideally, and I said in the answer to you, ideally, and this is just like real estate, always want to concentrate. What's the 3 words in real estate? Anybody that's on YouTube that's a real estate investor, you know what these 3 words are. All right, I think it goes location, if you can spell, location. So I always start everything off with location. So hopefully what you saw was when we were having our conversation, that's why I really like to start with the fib tool. That's probably the one tool that's going to keep you out of the most trouble. And, as I said, I mean, there is a specific type of risk management strategy that we use. I used to use for my old sort of client base that really didn't want to talk to me too much. They just wanted to have their money working in the market. I call it the little old lady risk management, where you never break the 5% of your stake that you're working with invested in any one idea, and that's just religion. And for those people that are going to take that kind of strategy approach, just concentrating on location. We'll put all these indicators and all this squiggly line stuff away. Just make darn sure that where you're buying is a half decent location. And that'll keep you out of a lot of trouble. The second step in our 3-step process, this is the indicator confirmation. And ideally, I'd like to see this concept called divergence. And divergence just simply means that the indicators are going one direction, your price itself is going another direction. And this is where that RSI, overbought or oversold, might fit into that equation. So I like the idea. I mean, hell, if you want to say I'm going to do location and then I'm going to do RSI, but you'll even notice here that yes, we're at the bottom end of the range, and I think 50% bounces, you're going to make money on this. But, you know, that's not quite enough. And then the final piece to this puzzle, and I gotta say, this Litecoin chart is just absolutely perfect for this. Although I'm going to lose all my pretty write-up here. I suppose we can come back to this in a moment. But the sort of the final coup de grace to all of this, which gets me so excited when I look at this Litecoin, is... the number 3 we want to see here is price structure. So 3, price structure. Now, price structure, it can take many forms, right? There's some people that are fans of candlestick patterns. These actual candlesticks themselves. There are certain patterns that these make that the Japanese have been trading these candlestick patterns forever. And they work. Could be just as something as simple as just hunting M's and W's in the pattern of the price itself. Now that could be something like just off of a line chart. Right? Hopefully you can see nice W's here. So I think this is a really good example where this is the 3-step process all put together. If we do a nice simple fib study from this high, we'll just use clothesline so you can see the price structure nice and easily. We go reload zone. So there is the area where we can start buying. If it's below reload zones, hell, even better. Stuff's on sale. Cheap, cheap, cheap. We look down at our indicators and you can see price is making lower lows, but the indicators are actually making higher lows. You want to sprinkle in that while we're seeing these divergences, can I get an RSI oversold reading? Ooh, even sexier. I personally built this indicator, and it's something that we have in our level 1 education program teach you. This is a heavily modified price momentum oscillator. There's no point going into the explanation of how this thing is built right now, but just simply when this yellow line, and really you might even argue that this indicator will make it even more simple for you as we'll get rid of the teal line. When this yellow line is at extremes, you know, same thing as your RSI, overbought, oversold. When it is at extremes, that's a really, really good tool to help you see overbought and oversold zone. And I would actually call this this indicator is stupidly oversold. And the sad part about it is when I was a broker, it was when the market actually did this. This is when the clients, the public, would call in and say, oh my goodness, sell, get me out of here. This thing's going to go off the board. And usually this is a really bad place to be a seller. And you can already start to see the price is starting to move its way back up. If you just wait for this condition to resolve itself and even just come back to the mean, right? You usually get a better selling price than if you just panic and dump through here. And you can even see that's happening right now. So location, reload at or below reload zones, awesome. Indicator confirmations, ideally bullish divergences. RSI oversoldness, Willie stupidly oversold, whatever you want to use. I think we're getting indicator confirmation. And then, as I said, the final piece to this puzzle, and in this particular case, all I have is a line chart on here. But the number one letter of the alphabet, that's the absolute best friend to all bulls, is the letter W. And in fact, it's so significant that Ernie and Bert are big fans of this concept. I think I have it over here. Oh god, it might take forever to find it though. Let's see. And well, actually, I think it was Joshua. You see Joshua over there in the lounge chit chatting with you guys, talking to you about being pizza delivery drivers. But a million bazillion years ago, I think Joshua was the one who found this for me. I don't know. Maybe I found it, but I have a feeling Joshua found it for me. Oh god, it's so long ago, but I thought maybe I could just see it here. But Ernie and Bert, and specifically Bert, was a card-carrying member of the International Brotherhood of W Lovers. Oh, actually, you know where I might have it? Is oh darn. Anyway, and I don't know whether that'll work. Well, let's see. Will that work? Something like that. National Association of W Lovers. So there's even a club in New York City, because I think this was based in New York City, for the International Association of W Lovers. And oh, by the way, I'm a card-carrying member. Although the Canadian chapter has kind of fallen to the wayside. But hopefully what you see is, gee whiz, look at that. There's a whole bunch of W's there. And as Paul was kind of pointing out, this is actually the missing ingredient to, if you didn't have this, like let's say you hit the replay button and we're like back here, all right? And you look at price and it's just making lower highs and lower lows. If you're going to go and buy this, and of course, maybe you even say, well, Brian, look, I got my RSI oversold too. So this thing looks really awesome. Where the hell's the damn control thing? There it is. All right. Is RSI oversold there? Looks like it's pretty darn close. Come on, RSI, get oversold, get oversold. 31, 30, you get the idea. All right. Oh, there we go. We just went oversold, 29.87. Okay, so I'm thinking about buying this thing. Now, if you just go and pay this price, how on earth are you going to frame the risk that you're going to take on this trade? And this is where W's help immensely as that number 3 reason to take the trade. In essence, the W itself is a built-in risk model. Because what this is trying to imply, and especially if we have, like, say, an image that looks like that, is this is a downtrend, right? A downtrend is basically measured by lower highs and lower lows. And really what you should see in a downtrend is you should also see, basically this is a channel. So lower highs, lower lows, that defines a downtrend. Notice that the W, though, has changed this image. Now, actually, we've got the potential for an uptrend now. Where, and if this is an uptrend, higher highs and higher lows, then really what's going to happen is we're going to start bouncing our way. Well, I'll just keep the color. Right, like that. Back here, why don't we change it to like orange? So, excuse me. The way that you sort of tell that this trend that's down, that this is finished, is this event right there. Where now, potentially, we're making higher lows and higher highs, and instead of it being a down channel, it's now actually maybe turned into an up channel. So we can use this to help us frame risk, where this is quite literally a visual representation of a change of supply and demand. In this case, supply just keeps overwhelming demand, so we make lower highs and lower lows. More supply, more supply, more supply. Less demand, less demand, less demand. Here, something changed. Now we actually have higher demand. As price works its way back down, demand is so strong that price can't get back down to these lows, and demand actually turns around and pushes price up here. And we have higher highs, so that means that supply, somebody came out and sold a whole bunch here, but then price gets back up here, and these guys are gone now. And the next supply zone is probably up in this area. And then same thing, market pulls back. There's so much demand that we don't have to go all the way down here. Demand comes in a little higher. And then same thing, price gets pushed up because of demand. Supply that was prevalent here, it's gone. And now the next place we find supply is up there. So the point here is that this W event is actually a very, very important event in the market dynamic. It is in essence the transition from a downtrend into a new uptrend. But you can't see that and you can't quantify that if all you're doing is you're just looking at price and you see that price just keeps making lower highs and lower lows. Well, technically, where is demand? Now, if price does come in and now start to actually turn and make a higher low, then you can say, hey, something's changed here with the supply and demand dynamic. And the good part about it from a risk taker's perspective is we can use this as information to help us frame our trade. Where quite literally, since supply was busted out here, boosh, gone right there, then that means that if I buy there, in essence, I'm coming in with new demand at the breaking of the old supply level. And now what I'm going to do is, because I just bought here, I'm going to use these guys, this guy here and this guy here, to defend my position. Because theoretically, if this is a bull, then what we should see happen is price should pull back. It should come into here. We should not go down to these levels because these guys are demanding so much that they should come in and demand more and prevent the market from pushing through those lows. So, believe it or not, this is actually the whole reason why we do TA, is we are trying to identify these little windows. This window where if I do buy this level, I have a very well-defined window right here to here that I believe that this is where institutional demand will defend my trade, and I can quantify the amount of risk I'm going to have to take if I want to participate in the market. That's the whole point of technical analysis, is to try and identify risk windows. And literally I'm going to buy the break of this supply level, and if the market should come back down here and blast through these levels that previously demand said no more down, we want this thing, buy it up. If the market should blast through those levels, then that's literally this event right here is telling me that this risk window is no longer valid and I should probably get the hell out of the trade. So that's the whole point. That's the whole reason why you do TA. And if you don't have those W's, how do you frame that, well, I know that I'm right versus I know that I'm wrong, if you're just going to, boom, just go and buy this level here? So to try and help the Matador, I don't know whether you're still here or not. I hope you're watching this maybe later on. Again, first and foremost, nobody should be laughing at you if you ever ask any questions at TRI. That should never happen. But secondly, hopefully this conversation helps you understand why you never really want to take a trade just off of like an indicator reading, that you really want to try and frame the structure of your trade so that the market itself tells you, gives you validation that yes, indeed, you're correct. I.e., if I bought, I see higher highs and higher lows. I'm in an awesome trend. You even heard Paul talking about moving his stops up as higher lows are made. I mean, this is basically what technical analysis is all about, is we want to identify these risk windows. So, and you can't do that without using a little bit of price analysis. And so that's why reason number 3 is so critical for a guy like me, is that I need price structure to help me validate the risk that I'm going to take on this trade. So hopefully you can see here now on Litecoin that if I do go and buy this middle of this W here, then what I'm really saying is that I believe that the trend structure was down, but the trend structure has now shifted to up, higher highs and higher lows. I'm going to try and buy that breakout of the W, and I'm going to risk to the bottom of the W itself. It makes it really easy to understand the amount of risk that's involved in the trade, and it makes it really easy to see. One guy that I used to like to work with, Johnny Hoagland, he would always say, what we want to find out as traders is if we're wrong, don't make it too painful. I mean, I don't want to have to go through this, right? If I use the W, I can find out pretty quickly and pretty easily if my thesis is actually wrong. Does that make sense? I don't know. Hopefully that was a fun little lecture. Somebody got some value out of that. I don't see the Matador on the chat anymore, though, so I have a funny feeling he bailed. But anyway, that was a fun conversation I just had with myself. Paul, are you back yet? I know Paul went for a couple smokes while I was blabbing away there.
Yeah, I'm back.
Oh, yeah, he's back. He's with a whisper. Okay, holy Jesus, look at that. It's almost 8 o'clock. Son of a gun. We could take a look at a few names if anybody has any ideas that they would like to review. Hey, there you go. TBG says, felt like level 1 all over again. Oh, and FYI, TBG's putting together an in-person seminar for TRI in the spring, right, TBG? So all site vets, if you've at least finished the level 1 program and you want to do some in-person training, we're actually going to put together a training program for the spring, an in-person training program for those people that would like to have a little bit more personal field. So if you happen to be a TRI vet and you've done your level 1 and you'd like to work in person with the team, and a bunch of people. We had a great time in Portugal, although we didn't really do too much trading talk. So that's why we're thinking about putting together like 2 week sort of almost like a boot camp in-person trading programs. So if you're watching this later on, you happen to be interested, feel free to reach out and let me know. We were thinking about doing about 10 seats, and I will tell you now, about 5 of them have already been accounted for. So we haven't even got word back that we've got the place booked yet, and already it's half sold. So just be aware of that if you are interested and you're watching later. Reach out to me, just PM me and let me know that you are interested. And we're just going to do it at cost for this first run, so it shouldn't be too expensive. So anyway, more of like proof of concept. Okay, so I asked you guys to take a couple look at, asked you for some ideas for us to take a look at. First off, Agent 87 says Apple 200 target. Not very crypto-y, but I suppose we can look at Apple. Let's see what you got there. I think actually I have a short working on Apple right now, if I'm not mistaken. Where do I have that? Stock market over here. Actually, I think it's over here. Apple 151, eh? Wow. All right, yeah. So this one, and the problem with Apple right now, of course, is that they are basically joined at the hip with China and Foxconn. Foxconn is their I guess. And what's so funny is that actually Foxconn, if I'm not mistaken, I think it's a Taiwanese company. So how ironic, eh? But so I'm not quite sure. I guess the stop right now, I'm not quite sure why that just says that. But I strapped on a short. This was actually, I was pretty proud of this trade. But there was the big honkin' M top. Then we had a dump. Then we had a counter trend rally right up into reload short zones. And the interesting thing about this is there was a big old price gap that needed filling in right there. And on that event, you can see we got a little bit of an inside bar failure, and I shorted from there. Market went zooming down, and we ended up taking I ended up taking profits down here. It was a 3-to-1 risk reward on half of the trade. Moved my stop to scratch on the remaining, and my price objective is, if we look at the weekly chart, the 200 SMA on the weeklies was down in here, but you can see the 50% rule of this entire move from the bottom all the way to the top was basically my target on this trade, $100. Could this thing bottom here and start working its way back up? Maybe. I don't think so, though, because, the interesting thing is Apple did exactly the same thing back last century, which is kind of weird. But it totally topped out into the late 70s, early 80s, and then, of course, it went into fucking crater mode all the way into the 90s. And it's so ironic because on a split adjusted basis, this stock, you couldn't give it away for the longest time. So you can see, interesting that TradingView even has this data. So you can see here's all the 1990s on a relative basis. Look at this is all these splits and stuff. Stock is only 27 cents a share. And the time to acquire this was, if you look at this, right, there's the late 70s bull. The time to acquire this stock, and the fascinating thing about this, people, is it doesn't matter whether it's Bitcoin or it's Apple computer. It's the same logic. Can you not see this reload zone? Look at that. It's textbook. And I don't know what letter of the alphabet do we happen to see happening here. Down, up, down, breakout. Hey, that's good old Ernie and Bert, International Brotherhood of W lovers. Actually, that's not even the best W, because that low did hold there, but I wrote it or drew it erroneously. So the point being that if I really wanted to invest in Apple, I would probably want it to look something along these lines. So if that's the case, I mean, gee whiz, this thing's gone an awful long way, and it makes sense. I mean, it's a market darling. Could it now spend the next? I mean, if we just do reload zones now, technically this stock should be a buy somewhere between. What is that? $39 a share and $69 a share. And right now it's sitting at 151. So there's probably not kind of a name that I would ever be interested in buying. I did like the M top, and so I was selling into that, and it turns out that was a pretty good trade. And if we do get those 50% pullbacks of the range, then that would be where I'd want to take the remainder of the profit. And I tell you, the news coming out of China is just nastier than, on the site. And actually, what I wanted to show you earlier was, why is the market rallying? Why is risk rallying? This was the Fed meeting minutes, and you heard Paul on his presentation. He had said that those Fed meeting minutes might actually cause the market to rally. Well, it turns out in the Fed meeting minutes, right, which is basically what they said in their previous meeting, there was a debate going around the table that maybe they've done raising. And, well, not necessarily that they've done, but that maybe they can slow down their pace of interest rate increases. So that actually ties in nicely with what Paul was saying earlier. And I think that's half the reason, like we said earlier, why was the US dollar cranking down here, and why were risk assets, stock market, crypto, all perking up here. And interesting, too, along those lines, with Paul sort of intimating that a lot of his community, and I see it, of course, all over the internet, I see it all over TRI, especially new people to TRI, they were starting to get a little stressed out here, especially with the FTX stuff. People are really starting to crap their pants. And so how ironic, what it really is it comes back to this image, wherever the hell that image is. Yeah, this image, we're in the part of the cycle where you have the despair, you have the fear, you have the anger, I actually produced this chart back here, and I basically laid out exactly what the psychological phases of the market were going to be as we worked our way through. And this is basically where we are now. I mean, are there a lot of pro football quarterbacks now touting cryptocurrencies? Wonder? Maybe? Maybe not? Actually, I listened to the head of the CME yesterday. He was calling Sam Bankman-Friedman guy out like 6-8 months ago and calling him a fraud in public 6-8 months ago. And nobody would listen to him. Who's laughing now, eh? Anyway, so public's been destroyed. Sentiment is insanely negative right now. And ironically enough, we're actually now into an institutional buying zone. And if anything, the Joey Diamonds of the world are going to get you freaked out as much as possible. This Thanksgiving dinner, oh my goodness, the rhetoric around the dinner table, crypto, you fools, and all that kind of stuff. It's coming. And the irony of it all is that a lot of people are going to give up and they're going to sell their crypto, and they're actually selling it straight into Goldman Sachs and Joey Diamond's hands, which is so frustrating, but it is what it is. Okay, blah, 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 bunch of rhetoric there, sorry, but hopefully that helps answer Apple. I would not be a bull here. I mean, maybe there's a bot setup. I suppose you could probably go something like boobity boo. What's Paul saying here? Paul's got something he wants to bring to our attention. I'll be speaking with Andrew Sorkin at the Dealbook Summit next Wednesday. So it looks like he's back.
Motherfucker. Should be in jail by now.
Yeah, you would think. I mean, Jesus, he's lost a lot of people, a lot of money.
Yeah.
If anything, this is kind of a sad commentary on our quote-unquote democracy. If it was any of us that pulled one of these, we'd be sweating our pants, but he's not, because he's got about a dozen politicians in his back pocket.
Yep.
The thing is this guy better be careful, because I could very easily see someone come along and assassinate him. That's how serious
definitely,
it is.
Yeah, a lot of people lose a lot of money. So
Oh yeah, yeah,
before they kill themselves, some guy could say, "Yeah, whatever, I'll kill him, and then I'll kill myself," or something like that.
yeah.
A lot of people put all the money in that in that
Well, and what
exchange.
really bugs you about this story is the way he was so cavalier about everything. You know, wearing like
Yeah,
track pants and shit to meetings and stuff. Just like, you know,
but
I've
even
said
his
on.
attitude now after the breakdown of the exchange,
Mm,
like nothing happened, really easy. Yeah, I messed up. Yeah,
uh,
some like it'll be something normal to do that. I don't know.
well, it's fascinating because you were talking about SOL there earlier.
Yeah,
And I wonder if that SOL starts coming charging back here.
yeah. Someone asked me, and I said, yeah, I could see $25 a bearish retest if you put the
Yeah.
candlestick.
And so what probably should happen is, you know, this seems almost like a Wyckoff check from the other side.
Exactly. I could see that. Why not?
Yeah. What's interesting too is you could actually draw some measured moves here. So logarithmically, oh yeah, look at that, eh? So the irony of it all is you think that, well, almost all the carnage is done. Maybe not.
No, $4 for me.
You know,
My
like
target.
that actually looks pretty legitimate to me. So, you know, I used to know guys well, especially when I worked on this one trading desk. This guy was like a short seller, and even though he's coming in at like $5, $10 a share, he would still sell here, basically expecting this thing to go into bankruptcy. So that's the stock market. I'm not quite sure how this all plays out. I'm actually a bit surprised that they haven't been looting this thing to try and come up with the billions of dollars they lost elsewhere. But, all right, so point of the matter here is the Sam Bankman Frieden guy's story ain't done by a long shot. If anything, you'd almost prefer that we just get it done, kill the damn story, and move on. And actually, in this ironic twist, one of TRI's principals was intimately familiar with the Luna story, and he likes to follow Doe very closely. And he noticed that as soon as this happened, and I guess it's the FTX story, but as soon as that all happened, Mr. Do Kwon all of a sudden started coming alive again and doing lots of tweets and stuff. So, yeah, that's not. What that means is we're not done this bear by a long shot. Those kind of people have to be washed out, completely gone, and we all have to say, oh, you remember that nightmare? Thank God we're not back still in that. But if this guy's still rearing his ugly head, as Paul just pointed out, and if Doe is right back to tweeting like a storm and everything's business as usual, it means that this thing isn't over by a long shot. And also, too, I might argue that if these clowns stick around, it's going to give the politicians a lot more ammunition to really regulate this space. Like, they'll be like, why aren't these people gone? Why are they still sticking around? Let's maybe throw them in jail. So, anyway, we'll see what happens. Only time will tell. What does Cole say? Cole says, how that pudgy Afro sporting fraud isn't in jail is bananas. All right. Thank you for that contribution, Cole. I think, Cole, what do we say? Was he born under a good sign? Be interesting to see what his astrological chart says. Anyway.
I
All
was
right.
upset when I saw that tweet. Even if I didn't lose any money on FTX. I didn't have any money, but I'm still, I don't know. Seeing that tweet, he'll do some public speaking after he broke that exchange and took all the money.
Well, I suppose there's going to be like I said, I'll be honest with you, like I said, him showing his face in public, he's putting a
Yeah.
big bullseye on his head. You might mark my words, people. If this guy acts nonchalant about all this, he might end up finding himself rather assassinated. People have assassinated others for far lesser reasons, which is kind of
Yep.
sad. Something about empires, maybe. Da, 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 da. And actually, you might even argue that this is an empire top on SOL right now, right? So anyway,
My target is $4. I'll be interested at $4. Until then,
$4. So that's just
yep,
basically a Wyckoff check of the original breakout
yeah,
there.
I have an alarm in that area. If below that area, in that area, I'll be interested in buying Solana. Until then, no, I'll wait.
I why Yeah, I think there's far better fish to fry. I mean, if you've
Exactly.
got money to spend in the marketplace, you could buy something like that, or you could buy something like this. I mean, I think this is a much better place to have some money working. And it's already done 88% corrections. So, but that's just Brian. Brian would much rather see a nice big fat W and participate than go and. To me, this SOL chart, this is like what they call trying to catch a falling knife. You don't know if this is a bottom or not. There's no W's anywhere in sight here. So, yeah, and I'm not necessarily being rude about Mr. Bankman Friedman or whatever the hell his name is being assassinated. That's just a fact of life. I mean, I'm in Vancouver, British Columbia, Canada, so I don't think there's any way they can pin it on me. But he's taking his life into his hands, being actually even showing his face in public right now. Anyway. Okay, so somebody said there's a couple ideas to chew with. Let's take a look at what? But remember, you have to wear the TBG. But do I look like Thrall? Is that the kind of shaman that we want? Actually, I could show you a couple of shaman characters I have in WoW, and they don't look. You wouldn't want to run into them in a dark alley. All right. Somebody wants us to look at PERP USDT. Jeez, what the hell's that? PERP USDT. Boom. Oh boy. Wouldn't mind seeing some W's here. If anything, this is a really, what I like to do, and this is going back to the weekly commodity trend survey. Is that why does BNB actually get a 6? And I mean, it's not like I'm in love with CZ, but there's a reason why. If we look at, not to be off topic, but just to show you. If we put on our moving averages, you see that the fast moving average is trying to cross back above the slow moving average here. So that, and actually this is a log scale, so it's kind of hard to see, but there it is there, right? Well off the highs. Moving averages are trying to turn back up. If we go back to your perp, and, it's probably in your best interest, especially in this, probably in this show's best interest, that we talk about assets that are actually trending higher. You can see that we have not turned the corner here yet. And a lot of shit coins still look like this. So I'd be a little bit careful here. Then also, too, our conversation about market structure. Is there any way to frame risk if we actually do go and buy that level? Other than to say, well, I'll be a little old lady and I'll just risk to zero. I say this could very easily go to zero, right? There's no indication here that the trend is actually up, right? Lower high, lower low, lower high, lower high, lower low, maybe, but definitely lower low. The trend is still down. The good part about this is it does look like it's a descending wedge, which is inherently bullish. But what you're going to need to do is you're going to need to see that breakout, which should come if this thing is legit. That will cause the slow moving average to continue moving down. But the fast moving average, and this is an exponential moving average, so it hugs price very closely. The fast moving average will cross back up, and that will give you that, what's the word I'm looking for? Trending signal. So, if somebody was going to come to TRI and ask me, Brian, what are the coins that you think are actually turning back up? They're at the bottom end of their ranges, and they're starting to turn back up, and they're starting to represent some interesting risk. I mean, it's interesting how Doge, of course, just recently had a big pop. And, this would be like pre-Doge pop. Doge right now, you can see it was heading lower, making lower highs and lower lows, and then it popped. And now notice the moving averages have crossed bullishly. So, as a result, on our trending signal system, we have Doge here as a big fat 6. It's at the bottom end of its range, and it's got 1,000,000 miles to go to its 50% rule. Right? Its 50% rule right now is 14 cents, and it's sitting at a nickel, or I guess 8 cents. So it's about 50% roughly of its price objective. So that's cheap, and the moving averages just turned up. So if I get any kind of W in here, oh boy, super uber bullish. Also, too, this is what we call a shark setup, where you have the market structures come in, then you have a pullback, and it tags the 78.6, and a lot of people just buy that and will risk to new lows here. Pretty well-defined risk window. So if I want to find and hunt for markets that are trending, I want to see that moving average cross. So we're looking at your name yet. I don't think on a weekly basis we're close to quote-unquote trending. Paul here saying that the OBV looks good. I'll tell you, something happened 2 or 3 weeks ago that kicked the shit out of OBV here, though. So somebody was doing some serious selling here recently. Here's probably also another one. That person who was asking earlier, what was his name? The Matador. Here's a good example. RSI goes oversold. Is that enough of a reason to justify buying? Well, as you can see, price is working its way lower. So this is probably a good example where these indicators can move into oversold or overbought, sit there for a long period of time, and we actually call this condition embedded. And you can see we're making lower lows here. So Paul is saying that on the daily chart that OBV looks a little bit better, but I'll tell you, I like to always start my studies off of the weekly chart. It gives me sort of a good idea of what trend is, and then we drill down to the lower time frames if we're hunting entries. I suppose you could see that descending wedge off this daily chart as well. So you can see we made lower low here. I think what you really need to see, though, you can even tell the moving averages here off the daily, they're still pretty sanguine. It's interesting how this 200 period daily is very similar to that 30 period weekly moving average. What you're really going to need to be turned bullish here is you got to start seeing that price structure. So very first thing, give me a nice W here. Show me that this thing's legit. Then, kind of like the Doge, I actually don't mind if the W is kind of violent. And then I want to see that Wyckoff check of the breakout. And ideally, I'd love to see that Wyckoff check of the breakout comes in that reload zone. So this guy's got quite a bit of work to do before you can actually say this thing's investment grade. Now, if you're a swing trader or even a day trader, Paul has demonstrated how you can come in off of these lower time frame charts. This, to all intents and purposes, could be kind of like a inverted head and shoulders here. And so your lower time frame market participants are like, yeah, Brian, this is a reload long zone. And I've got a nice inverted head and shoulders coming in through that zone. But just understand, if you're going to trade this kind of time frame, usually the head and shoulders pattern itself is actually giving you price objectives at the same time. You basically the measure from the bottom of the head or top of the head, as the case may be, and then measure that back to the neckline and then the breakout of the neckline, and that's your price objective right into there. So if you can make money off of that, great, and there's nothing wrong with that, but just understand we're now talking about swing trading, maybe even day trading. We're not talking about investing, and we're definitely not talking about like, buying the trend and investing with the trend. They always say the trend is your friend. And I might argue from a higher time frame perspective, the trend here is still actually down. But, you want to take a shot off of that reload zone area, looking for a test of the high. I mean, just like Paul showed you, if we're in a trading range environment, then what we should probably do is trade back up into the reload short zone. So could you build a plan and make money from trading? Risk 1% of your stake. Come in on the buy side looking for this pop up into, say, the 200 period or 200 period 243 minute moving average resistance. Yeah, there's nothing, no reason why you couldn't. But this would be like trading room kind of conversation. Probably not sort of like, hey, this is a public crypto channel, can you tell me whether this is a good investment or not? That is definitely not that conversation. So, all right, so I hope that helped. Who asked for that? Somebody asked for that. That was Talal. Hopefully you got, we'll give you one request. I see you got another one there, but there are a few other people that asked. Let's go take a look at that YFI. Versus USDT versus the tethers. I guess we can look at that. Wow, look at that mess. What the fuck happened there? Holy moly. Now that's interesting, eh? Welcome to Volatility Central. This is insane. I can't but if anything, this is such a great analogy of oh, that's not the right one. Why? Oh, that's two eyes. All right, so you didn't want that one. So should I leave this one? All right. I have no idea what's going on over there, but let's see what's going on. Oh, actually, that looks a hell of a lot better. This one actually looks like it's buyable. Believe it or not. Looks like you're a little bit early, but nonetheless, there is the reload zone of that big honking range. So you can definitely see where buyers would be willing to buy. It looks cheap. Holy crap. I mean, it's come down an awful long way. Interesting too. Look how it's just basically come right back down to its original sort of. Think of this, TBG, you know this, right? Think of this as sort of, and this is actually the same thing that Paul was talking about earlier, right? On that Solana, was it? I think that's what it was. Where he said he wanted to wait for the market on Solana to come down into its original bottoming zone. Like, ironically enough, the guys who actually bid this thing up originally, they're long from this little window right in here, especially that tail right there, right? That's where they're long. Notice, look how the market came down and tagged their original long entry window and then just took off right away from there. So let's see where that is. All right, so that is that original level. And there is the original low. So you can see how the market's just sitting in that original buy zone. Because these are these tethers, and you really don't, and it's Binance, you probably behoove you to go up and or go look and see what the original price structure bottom is. On other exchanges, maybe this graduated from ShitterX or KuCoin or something. Maybe this was like this. You just don't know. But if we just use these tether levels, I'd say that's a pretty darn important level there. You're definitely TBG. You just keep looking for these kind of ideas. Keep thinking along these lines, and you will do perfectly fine in this world, my friend. Do we want to look at maybe what it's doing trending wise? Like how close it is. So it hasn't quite turned the corner just yet. So as I kind of thought earlier, you're maybe a bit early on this rally. It happened so quickly after this dump that if anything, you probably call that like a dead cat bounce. So it's going through the process of testing the original bottom. If you want to be aggressive, this is what's called an inside bar right there. Notice how that happens to be off of that original institutional sort of fingerprint level. So you could make the argument also too, it is in the reload zone. You know how much I love 78.6s. I mean, just as a professional trader, like, I even saw this in the stock market. It was shorts, but basically the same sort of thing. Just doing something along those lines, 2-to-1 risk reward, that's probably like a trade Paul might be interested in. What do you think, Paul? Is that down your alley? Oh.
Yep.
Oh, there he is. So it's interesting. The buy signal on the inside bar, though, doesn't come in until a break of 6797 there, whatever that number means. And it hasn't started to officially trend higher here. So I'd say that you're still bottom fishing. If anything, kind of like Paul said earlier, what I think's probably going on here is this thing's trying to establish a trading range, which means, 2-to-1 risk reward. If I come in at the bottom end of the range and I look for that 2-to-1, oh, what a surprise. I think, Paul, what do you kind of like that 61.8 level, don't you?
Yeah, definitely.
All right, we call that Mountain Man level. I used to be an old prop trader that I used to work with a million years ago, Brandon Rigo. He lived by 61.8s. Also notice, too, that level is also going to be a test of value high. So if anything, I think TBG, what you're doing here is you're trying to come in and buy basically the bottom end of a range. And if you can get that pop up to 2-to-1s, pay yourself a little bit, maybe move your stop to scratch if you did sneak in here. And that kind of rally should force the moving averages to start seriously thinking about crossing bullishly. If that happens, then you're made in the shade. I'd say the statistical odds of success start going way up. Right now, it hasn't quite turned. And this thing might just paint a lower high and lower low, and it goes through these lows. And if that's the case, then I think you're probably best just to leave this thing alone for a while and just see if some sort of W can come in here. If we go back to that daily chart, what does this bottom look like? On the dailies, you can see how that inside bar is trying to turn into a W. In fact, a number of Ws. I always like to say that I want to have 3 higher lows to risk against. So 1, 2, 3. That's got chicken shit Brian written all over it. So that's not, you're definitely thinking in the right direction. Carlton? Clayton. Anyway, that's an inside joke. TBG. Both. And oh, by the way, Nadja, she's still there. She's thinking about coming into the ownership group of this thing, so you might see her again. She's great. If you're watching Nadja's actually super busy working away on level 1 course material, so I'm very proud of her. But she's got to learn your name. Yeah, a lot of the people that were in Portugal are going, hey, I'm coming right back. So anyway, okay, not a bad idea, dude. I think you're gonna do perfectly fine in this space. Where's my pinky ring? I gotta put my pinky ring on for good luck. Anyway. Okay, so hopefully TBG, that gave you an idea to think about there. What do we got up top here? Silver. Great Del Moody wants us to look at silver. You know what I noticed, and I was looking at this earlier tonight when I was studying all my breadth charts. Look what's happening over here on the gold and silver ratio. So theoretically, when this ratio is moving up, that's a sign that the economy is doing pretty well. I think that's how it works. Maybe I have that backwards. Where are we here? Yeah, I think so. When this is moving down, then no, it's got to be the other way around.
It's backwards.
Yeah, I'm not
when
quite
it's
sure
moving
why
down, the
I
economy is
defined that.
doing okay.
Yeah. So when this is heading down, it means that silver is getting more expensive. It takes less ounces of silver to buy 1 ounce of gold. When this ratio is moving up, it means it takes more ounces of silver to buy 1 ounce of gold. You can kind of see we had this cup and handle pattern. Of course, that was right into the financial crisis there. And I think you can make the argument that the economy kind of went a little screwy there. Then, of course, we had, sort of inflation bugaboos. Then you see in 2020, the economy started to really kick in. No, I don't know. Something's not making sense here. I don't know why this is so screwy. Gold over silver. Yeah, well. Okay. So theoretically what this means is we had a period here where the economy was weakening, and that kind of makes sense because the Fed was getting serious about raising interest rates, and I think this was sort of a message that the economy was going to cool. But notice it almost looks to me like now we have a head and shoulders top in this relationship. And I don't know whether I showed you earlier, but it looks like the Fed is now, whoops, not there. Oh, where'd it go? Anyway, it looks like the Fed is now saying that maybe they're going to cool their jets on raising interest rates. They're not so worried about inflation anymore. But one thing this chart is sort of saying to me is that silver is actually outperforming gold right now. I don't know whether that persists. I mean, maybe this W is out and we head back up again. I don't know. But it is interesting to see that this is, it's not the same message as we had here coming out of sort of, that's when Vlad went and did all his stupidness there in Ukraine and stuff. So economy was kind of slowing, people shitting their pants and stuff. Actually had durable goods orders down in the States come in about 3 times as anticipated this morning, which I think caught a lot of people off guard. That would sort of help the silver demand. Because silver, remember, is an industrial metal, whereas gold is a bury your head in the sand kind of proxy. So, from a ratio perspective, it looks like market's a little happier. Economy's a little happier, so as a result, there should be some strong demand for silver. We talk lots about M's and W's. I think you guys heard that out the butt here tonight. So everybody should look at this chart and should see a pretty well-defined W down in here. That looks like it's actually confirmed. It does look very head and shoulders-y. So the important thing here is we'd like to see that the left shoulder is higher than the right shoulder. Yeah, it's a bit iffy. But nonetheless, a pretty nice looking W. Down, up, down. We tested the lows. We had a big, ugly down day, but the market could not go through that low there. Come on, you serpent jerk. All right. Right there. So W's, they're technically bullish. And like I said, that probably looks a little better than the gold chart. Interestingly enough, kind of like what Paul was saying earlier in crypto, I think you can see the same thing in these base metals. I think you probably have a trading range there. So bottom end of the range, top end of the range. I don't know whether we got back. It doesn't even look like we got back to reload zones though. So, well, actually, no, I stand corrected. So Mountain Man, interesting too how they slammed the market back into value here. And because of all this sideways consolidation, there was especially people went short and then they got trapped and the market exploded higher. There's a lot of people that are in silver from this level here. So pull back into that level, all of these people that are long and the guys that put in this bottom, they're like, oh, no, you don't need to go any lower. Get your ass out of there. Do you buy silver there, though? It looks a little expensive. If anything, you can see all this bearish market structure. That looks like a head and shoulders top, and that's basically where we are right now. So my hunch is if you did a fib off of this is basically the 50% rule. So if that's the case, then it's not really a good buy or sell level. Yeah, we're just sort of sitting at the mean. If I wanted to buy, I'd probably want to wait for some sort of dip against these lows, maybe tag the POC again. If I wanted to sell, I'd be thinking up top here. You could do a measured move off of this range. Foggenbaums. You could probably do a nice little Foggenbaum chaos theory. What do you think the odds are? 2.618 is basically a test of those highs. Chaos theory, boom. Oh, actually it's a lot lower. It's only a test of that high. So, and probably like reload short zones. I'm getting the feeling that that's probably right in a reload short zone. So let's see what we got there. RLZ, boosh. Hey, look at that. Right in between. So, can you make money on a move up into there? Yeah, maybe. I don't think it's like pound the table. Oh my God, you gotta buy. What I would say is that we are technically in a friendly part of the silver seasonalities, if you will. So, if we go and look at... actually, I probably could have seen it there, but where the hell's the damn commodities? Silver. So if you're a silver bull or a gold bull, the cool thing is you can see middle of November, we're kind of in a friendly part of the year. You can see that rallies right up into the beginning of December. This actually, I spent a lot of time today talking about irrational exuberance. So if you don't know what that means, then maybe consider joining our site. And we can talk lots about sort of professional, like what would the professionals be thinking the beginning of December here. Interestingly enough, once we get through that pivot, then we go back on the bull, and you can see the bull goes all the way up into sort of the middle of February. So you're in a friendly window. Be forewarned. Once we get through this holiday weekend, we should see a pullback here. Oh, really? God, have I been talking 2 hours and 2 hours and 40 minutes? All right. Paul's got to get on with the rest of his day. So I think what we'll say here is,
I'm okay, Brian. It's not a problem about me. I just reminded you. We
Yeah, I
have
know, but
2
that's the
hours.
problem with me is that if I don't pay attention, it'll be midnight here and I'll still be blabbing away.
It's morning for me, so I'm okay. I'm looking at the charts. I'm speaking.
If you got
I
to
don't
go
have
do
a
a
problem
trade,
with that.
just check out for a few minutes. Anyway, so just to finish off this thought, just be careful there. Maybe wait for your buy window following that irrational exuberance window, which almost always comes. And, we were looking at the silver chart itself, and you can see that, this isn't really the best place to buy. Actually, what I would probably do at this point is this is a weekly chart. So let's go down to the daily chart. And do we have any price gaps? That's usually, somebody was asking what are the odds of price gaps getting filled in? Something like 90+% of the time. And if it's a candle chart, then candlestick aficionados will not consider this gap to be filled in unless there is an actual body that actually comes down and fills the gap. So, if you had a candle that looked like that, and then you had a tail that looked like that, and the price came down, and you would say, is that gap filled in with that tail? I would say, no, it isn't. If the candle body itself comes down, right, and I suppose this would be a down candle, so red. If the candle body comes down, fills in the gap, then yep, that gap is officially filled. So, if you are interested in silver, and I might even look at like silver stocks, what are some of the big silver stocks that we used to watch? Those are probably the ones that you really want to keep an eye on here. They will tell you. The only problem is I don't know where my stock list is. These are all these futures markets. Well, I guess we can do it here. All right, so our silver names. I'm thinking things like, these are copper. Where's silver? Silver. There's nickel. Where is the silver? Silver, I know you're down here somewhere. I think I got it in all my blue chip metal names. Here we are. So, First Majestic. This is a pretty popular silver name. Holy Jesus, look at the size of that gap. So there's probably a level for you to pay attention to. That's on Canada, though. I doubt you guys trade in Canada. This is US. Again, there's your level. So, what's probably, Jesus, looks dangerous. That's actually what they call an outside down. Actually, is it? What's that high? 980, 979. Okay, so it's not a key reversal. It is an engulfing bar. That's a pretty nasty sell signal. But there's reload zones. So if anything, I like the idea. There's the POC. There's Paul's Mountain Man level. Fill in this big honking gap here. If you're going to buy, maybe work your stink bids down here. That's what I'm thinking. Pace this North American, Pan American silver, beg your pardon. Also, too, notice there's a gap, so you could work your bid down there. That's a pretty sloppy looking bottom. I wouldn't be surprised if this is like a head and shoulders pattern. So we go, boom, 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 boom. Have your little rally that's happening right now. I don't know how high it goes. Maybe it's like something, I don't know, maybe something there. Then watch for the gap fill. And if you can get that turn right in on that gap level, that's probably a wicked level to try and sneak your way in if you're a silver bull. And by the way, I'm not really a metals and commodities bull anymore. I would much rather be investing in growth stocks than commodities. So, but that's just me. Okay, almost 3 hours, so I think we're probably going to leave it at that. I could sit here and talk hours and hours and hours and hours, but it's just wasting everybody's time. I hope you guys got some value out of that. We did look at some interesting names. I think I hate to say it, and of course it makes sense because I think TBG, I think he's going to do very, very well in this space. Um, in fact, this is the kind of thing, like Paul is a student at TRI. I would have bought a call option on Paul years ago. I would buy a call option on TBG. And especially if he's looking at names like this, I think he's understanding the way the game is played. So congratulations, Clayton? No. Chester? No. All right. I guess the only thing, but we didn't have Ben here this week, so we'll just leave the predictions till next week when Ben comes back. We didn't really update the database either. Call this a free-for-all. I don't know. Paul, you got any closing thoughts for these good people?
I'm still bullish on Bitcoin, as usual.
Actually, maybe we better check in because this is, I think, the time Paul actually wins.
Oh, I don't think so.
Oh, look at that. Brian had a -2. Oh, Brian's looking like a doofy. But both of you guys were uber bullish.
Yep.
How did we do here on the week? I don't even...
yeah,
if we just take the current price right now, it's 16,681. And what was this number? 16,664.
Exactly.
So,
0.
I think that means a gray, doesn't it? Sort of like a neutral.
Yeah.
So how ironic. We'll just type in here 16,684. Is it 84? What the hell is this? So it's up $20. And what is it? It's the 23rd today? Or it's 22nd? It is 23rd. And that means it gets a gray. But although I'm... can we do that there? What happens if we do that there? Hey, there we go. So, Brian... But you guys, at least, you were positive. So, there we go.
Yeah. I'm always positive in this bear market.
So, yeah. What do you think Paul's going to say for predictions this coming week, guys? Do we need to ask?
No.
I'm just going to put it to. Might as well.
Yeah.
I can't speak for you, but would you put it to?
Yeah, definitely.
There you go. So, ever the optimist. What the hell, eh? Ben, we'll let you decide when you get back if you want to fill something in there. And Brian, what the hell's Brian going to predict here? I hate to say it, but nothing's really changed here. I mean, it's encouraging that we are trying to pivot back to the upside. Don't get me wrong. But, oh, geez, where the heck did I put all that stuff? I don't know whether I actually have any buy signals here yet or not. Oh, yeah, here, it should be over here. So let's see what we got. 16,682. Yeah, well. Yeah, I mean, that's the irony of it. I got stopped out on my short at Scratch, but nothing's really changed here. I know Paul was saying that to his community that ranging market. We've just gotten back to the 13 EMA, so this actually should act as resistance now. And next Wednesday is, wow, geez, that's the 30th. Oh, JoJo's birthday. Actually, I was surprised. I had dinner with a gentleman the other night, and he remembered JoJo's birthday, and I was very touched by that. I couldn't believe that. So, anyway. What do I think is going to happen here into next Wednesday? Oh, it's tough to say. You can almost see how there's a bit of a sine wave pattern to this, though. Yeah, that's what I've been doing those sine waves recently. So, I don't know. I'll do this just for fun. Let's see. We'll go here, and let's go. Stretch this out a bit. I don't know, maybe here. Whoops.
I could see an inverse head and shoulder. And now...
that's bullish, right?
Yeah.
All right. So that means we're up inverted head. Yeah, well, you're assuming a lot there. That's fine. That's not bad. That's not bad. It looks like this should be a bit over though, something like that. So it's going to be on the upswing, kind of like what we are here. You notice that's on the upswing. So up, probably against your level there. I do kind of like that thinking. So something like, oh god, where the hell is it? Here. So up, and down, and up. Geez, like, I'm almost thinking like maybe it's just going to be unchanged, maybe something like that. It's interesting how we are stuck in this trading range, eh? So,
Yep.
yeah, I think I'll just put a. Oh, God, that's a tough one. I'll go with a. I won't be as negative, but I'll go by time we're over here. I think we're gonna be a bit lower. But yeah, what the hell? Doesn't really mean a heck of a lot. Just having fun. So I'll put a -1. Never did get my -2, but we'll see how it goes. And then Ben, if you want, when you come back, if you want to put something in there, feel free. Okay. Why don't we leave it at that? So hope you all enjoyed the edutainment this fine evening. Thank you very much, Paul, for your steadfastness and great contribution as always. Thank you very much for putting up with me and all my endless talking. Slow and steady wins the race. In fact, actually, our next meeting, if I'm not... Oh, no, I guess that's on the 14th. So we still have quite a ways to go until we actually get to that Fed meeting. Anything could develop in between that, so keep your eyes peeled. Slow and steady wins the race. I guess probably a closing thought. We do have Black Friday event coming up here, and we do have a few sort of deals that we're kicking around here that we're going to be sending information about. I have to say the breadth indicator, the data coming back on it is just absolutely fantastic. So, these guys are going to be talking to you lots about the dashboard in the Black Friday deals. As well, too, though, we have a new school term coming up in the new year. I'll tell you, I have not seen anyone on the internet have an education program that can hold a candle to our program. There are programs where there's maybe one or two guys and they do a great job sort of showing you how they trade, and there's nothing wrong with that. And the basic process of running these businesses of trading, I think, is it's fairly cookie cutter. I mean, it's not like anybody's reinventing the wheel. But what I really love about TRI is everybody that sort of works at TRI has my same sort of weird bent on PMA for the win. You see Joshua, he's over there on the YouTube page chit-chatting. He's now graduated to our level 2 instructor. Level 1 instructor, Grim, I mean, he's an absolute saint. Level 3 instructors now, Zach and his sidekick Joe, they're turning into spread trading gods. It's so cool watching them in action. That's if you like things like options and derivatives. Very, very proud of this community and the program that we put together. If I understand correctly, the boys do have a deal for the school program Black Friday. I'm not going to really shill you anything in particular. What I'll just simply say is on, I guess, tomorrow, Thursday, and Friday, and through the weekend, because it's supposed to be like Cyber Weekend or whatever, right? Come to this page. I'll put this link in the video's description so you can just get it right in the comment section. Throw your name down, email, and then that way you can get the sort of Black Friday promotional ideas. Like Paul, if any of your community wants to sneak in, we'll give you guys a bit of a break in the price for the term that starts in the new year. And then, of course, anybody who does do that, you can have site access until that happens, and come and hang out with guys like TBG and Adam and all the other, a lot of Cole that we see over there on the YouTube page, and a whole bunch of other TRIers that you see here in the Hangout. They hang out with us Monday to Friday, and we do these 2-3 hour videos every single day. So if you kind of like this kind of thing, this sort of interactive experience with me and the other OGs on the site, well, that's what we do Monday to Friday, every day of the week. So, okay, I think we'll leave it at that. I'll throw this link in the video description. PMA for the win. Thank you very much, Paul. Paul, any closing thoughts for these good people?
No, like usual. Manage your risk, play your setups, don't panic. We are in a trading range at the moment for swing traders and day traders. Investors, just slowly accumulate. We are in the last part of the bear market, so it's time to pay attention.
Well said. All right, everybody. Paul, you want to take us on out of here?
No.
The only thing left for us to say is...
Bye for now.